Hello everybody, this is not a crypto expert chiming in with another video, and today I wanted to give a warning to the folks that are out there doing their taxes that purchase crypto and have not reported that cryptocurrency on your taxes. But before I get into the topic of discussion for today, I would like to ask that you please consider giving me a like, giving me a heart, giving me a thumbs up, giving me a follow, a subscribe, hitting that post bell notification. I'm not going to ask you to share because it seems invasive. On my channel, I talk about cryptocurrency and blockchain technology. I try to keep it entertaining with a beat in the background. So on to the topic of discussion for today, which is failing to report cryptocurrency on your tax return could lead to audit or jail time. And this is coming from a Ohio ABC website, news site. When it comes to cryptocurrency like Bitcoin, the IRS now wants to know about any transactions. It's not necessarily like the Wild Wild West where you can just have all the secret money and maybe not report it and maybe not pay taxes on it, said Tabitha Tomlinson with H&R Block. The IRS now asks, at any time during 2019, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency on the 2019 Schedule 1? The agency is now treating virtual currency the same way as other stocks and investments. Tomlinson says last summer, the IRS sent out thousands of letters warning taxpayers with cryptocurrency transactions they may have failed to report income and taxes owed. If you made any virtual currency transactions, even small ones, you have to report it. The Schedule 1 has a checkmark box on the first page where you can report it. However, experts say the next step after that isn't clear. Depending on how you use cryptocurrency, you have additional responsibilities. If you are an investor, it's going to be similar to investing in a stock, said Tomlinson. You have to know how to do that, and if you don't, there's not a step-by-step guidance that says step 1, step 2, step 3. She said the most important thing is to create a paper trail of every cryptocurrency transaction, because if you fail to report, you could face an audit, fines, or worst case scenario, jail time. Because it is so new and so foreign, you may not even get tax documents on it. So it's extremely important that you keep detailed records of your purchases. Tomlinson says if you have any questions while filling it out, it's best to contact an expert. So I would certainly encourage anyone that's listening that's in the United States that has to pay taxes to make sure that you report your cryptocurrency purchases, just to avoid coming on the wrong side of the IRS. You don't want to be audited. You don't want to have to go and explain why you didn't do something or pay some ridiculous fees because you didn't report something. With these companies, especially companies in the United States that have KYC, which is Know Your Customer, I'm pretty sure that they're giving that information over to the IRS, so it's just best to play it on the safe side. I'm not going to tell anybody to try to evade paying taxes or anything like that, because it's just not a wise thing to do, because it is the Internal Revenue Service, and I hear they are not very pleasant to deal with. So once again, I would highly suggest that you pay your taxes or report any cryptocurrency transactions that you have made in 2018, 2019, just to make sure that you don't run afoul of the IRS, because you don't want to be upset and be taxed like a ridiculous amount of money for something that they don't understand. So with that being said, folks, hit that like button, that heart button, that thumbs up button, that follow, that subscribe, that post bell notification. I'm not going to ask you to share because it seems invasive, and I hope that you're having a great morning, a great afternoon, and an even better evening.